Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 3rd of May 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. And a relatively quiet session, I have to say, on the global foreign exchanges overnight. A few major movers and markets, I suspect, marking time ahead of the week's second key US data point in the shape of the April unemployment situation report, or non-farm payrolls as it's more commonly known. In terms of moves, well, we're going to focus on the lack of movement, really. You can see here, euro dollar modestly lower on the day, down by 0.04% against the US currency. GBP, USD, cable, the cable rate unchanged, effectively just up by 0.02%. There was a bit of movement in the New Zealand versus the US dollar, with the Kiwi gaining 0.12%, and that's pretty much the standout move as far as the majors are concerned. Elsewhere, the dollar lost ground against the Indian rupee, the rupee recovering 0.17% against the US currency, though it remains very much under pressure on an annualized basis. Dollar index, well, that sort of typified the climate. It didn't move at all in the last 24 hours, unchanged as we start the London session. There was marginal movement in the South African rand against the US dollar, but again, that's been a volatile currency of late, and we only saw 0.01% gain for the US dollar there. So marking time ahead of those key non-farm payroll numbers due out at 12:30 GMT, of course. Okay then, speaking of data, what's on the calendar? Events that may move the markets today. Well, there is some other data to consider apart from the non-farm payrolls later today. We've already had building permits data out of Australia for the month of March, a negative number, and more negative than consensus as well. So another blow to the US construction market there. We've got at 06:30 GMT Swiss Consumer Price Index data for the month of April, and then at 8 a.m. The second speech this week from German Bundesbank President Jens Wiedmann, who of course is very much in the running again for that ECB post when Mario Draghi steps down at the end of October. At 08:30 GMT, we're back in the UK for services PMI data for the country for the month of April, and then we cross over the channel and back into Europe for CPI, Consumer Price Index data, year-on-year data, these preliminary reads for the Eurozone for the month of April. A pause then until 12:30 for the main course of the day. As we said, the non-farm payrolls and the unemployment situation reports for the US for the month of April. Estimates have edged up slightly. We were looking for 180,000 jobs, I should say, earlier in the week. Consensus now has edged up to 185,000, but that's below last month's read of 196,000, which of course beat estimates itself. After the non-farm payrolls, we come back to the US at 13:45 for market services PMI data for the month of April, and the similar data on a composite basis for that month too. And then at 1400, the ISM, the Institute of Supply non-manufacturing PMI data for April as well. So between those two sets of numbers, we've got a real chance to dig down into the US economy and see how it is performing after that excellent factory orders data that came out yesterday afternoon. Okay then, breaking news and comment that's caught my eye overnight. A relatively slow news day, but first of all, the final read of Australia's April composite PMI settled at 50 in April, up from 49.5 in the prior month. However, the service sector continued to struggle, though the one bright spot was that it slowed less quickly than it had in March. So some mixed signals there coming out of the Australian economy. US equities eased again last night as the markets continued to digest the FOMC meeting and what the future path for US interest rates is moving forward from here. Early indications from US futures suggest that Wall Street will reclaim those losses today, and all three, the Nasdaq, the Dow and the S&P futures, are trading higher than last night's US close. Donald Trump has withdrawn his nomination of Stephen Moore for a senior post at the Fed. Mr. Moore had come under increasing scrutiny after a series of controversial articles he wrote historically came to light, and so Donald Trump has distanced himself from Mr. Moore and must think again. Okay then, food for thought, something to take away with you into the trading day and beyond. and why not think about this? As we know, we have the all-important non-farm payrolls data this afternoon, but I thought we'd take a look at what some of the other signals from the US employment data, or measures from the US employment data, are telling us. And we've seen some conflicting signals. The first of our charts here shows initial jobless claims in blue against continuing jobless claims in the broken black line. Just to be clear, initial jobless claims are those people who are newly registering for unemployment benefits, and the continuing claims are those people who've been on unemployment benefits for some time. Both metrics tipping higher. We've seen 2 weeks of higher initial jobless claims, and the continuing jobless claims have also started to turn higher once more at the end of April. Whereas, if we look at the right hand side, I plotted non-farm payrolls data against ADP employment change, which is a private sector measure of job creation in the US. As you can see, we've had a slightly mixed period with the non-farm payrolls. There were a better figure last month after February's somewhat depressed read. But as you can see, the ADP data has shot higher with a well, I suppose it's fair to say a seasonal record of new job creation there. So more unemployment here, more job creation here. I guess the non-farm payrolls will give us a chance to decide which of those two factors is the most important or the most pervasive, shall we say. Okay, it's risk warning time. Please do take a moment to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do take the time to contact your Pepperstone account representative. And do take the time as well, please, to read this risk warning thoroughly. Thank you very much for your time today.